Minute multipliers, back with Leo Pareja, hanging out, talking about principles for raising capital. By this time, you've seen the first two videos, so you know Leo's background on the fact of how much capital he's raised. Leo, it's very impressive. And so a guy that comes with your type of wisdom and experience, we want to listen to. Now, you and I were talking about principles, and I laugh at this principle a little bit because it's so foundational, it's so good. And I can imagine how many people don't follow it because they want to be cheap and they want to save a little bit of money. But it's the idea of spending money and making sure you get good paperwork. Talk to us about this when it comes to putting deals together.
Yeah, no, I made sure to share this one because I think coming from a sales background and, one of the things I've always said at keynotes from stage is I believe in R&D, which is rip off and duplicate. And for most things, that's okay, like scripts or even ads and copy and content creation. Then you can mastermind with people outside of your market and kind of get best practices. But when it comes to legal paperwork, I do not suggest that at all. I've seen people who teach fundraising seminars and include paperwork. I think that's nonsense. All these United 50 states operate differently. There's paperwork language in our Maryland contracts versus our DC contracts versus Virginia about, usury and personal guarantees that vary state to state. When we raised a fund, we spent $100,000 raising the paperwork for just the paperwork. And you make sure you have attorneys that walk you through, are you going to take accredited versus non-accredited, and the blue sky laws and all the stuff that comes with it. And then when we raise money for software companies, you find the top law firm that specializes in that. And you can use kind of the rip off and duplicate strategy on maybe the people involved. I'd pay up for the marquee law firms in that case because A, it makes you look professional, and B, if shit hits the fan, you have the best legal people supporting you. And because, as the stakes get raised with the more money you raise, you just can't leave yourself open to any liability, because being amateur with millions and millions of dollars at play can potentially open you up for quite a bit of liability.
And I'm sure once you start to play at a higher level, depending on how much money you're raising, you're gonna be sniffed out on the fact that you're coming in and providing just basic crappy paperwork. So not looking good for reputation and credibility as well. So great principle. Again, take the time, spend the money, get with the right people to produce the right type of paperwork that needs to be at the caliber it will be at. And again, Leo, hanging out with you, it's interesting, as much capital as you've raised. It always amazes me as I talk with guys like you. It just comes down to these really solid principles, right? And you've laid those out, right? Number one, over the last 3 videos, go to people who like your asset, love it, right? Don't try to sell people on something that they don't want. Number 2, always communicate up front the possibility of loss. And number 3, come in and make sure you do your paperwork right with good quality. So Leo, thanks so much for passing on the years of wisdom. It was awesome hanging out with you. And Minute Multipliers, we will talk to you later. Thanks.
My pleasure.